Welcome to the Tax Lawyer here on the Legal Broadcast Network. As tax time fast approaches, one of the things we often are faced with are a glut of 1099 forms. And they've become more common than ever. Everyone now appears to get some, and they're for everything. As Rob writes, interest, dividends, real estate sales proceeds, all kinds of things. It's easy to miss them. It's easy to accidentally ignore them, but that can cause some problems. And we're just going to talk a little bit about what a 1099 is and how the IRS treats it. Rob, welcome back.
Thanks, Scott.
You know, it's just a simple little form, really, is what it is. And you've written this 3-page article on this, and there's so many aspects to this, and there's some, some important things that people need to know, right?
Right, and I guess you've already said it, Scott, but the most important thing is you can't ignore them. They have your Social Security number or other taxpayer ID number on them. You know, generally for individuals, it's your social, and so they will be matched to your, your tax data. They will show up, and the last thing you want to do is ignore them. You need to pay attention, and even if you think it is wrong, if you have a 1099, you need to put it on your tax return in some fashion.
And you can get a 1099 for a very small amount of money and easily overlook it. But isn't that a case where that could inadvertently trigger an IRS audit in some cases?
Yeah, I mean, just to be clear, what normally happens, and I guess it depends on what you mean by audit. I think we all use the term, sort of generically. If you were to ignore a 1099, Scott, you said it's easy to overlook a small amount. Absolutely correct. The threshold for interest income is only $10. So normally banks are required to send you a 1099 reporting that you have interest income, even if it's less than $10. I said less than, even if it's only $10. So if you forget about, you get a 1099 for $15 of interest, you do not report it on your return. It probably won't be a big deal, but what's very likely to happen, I would say it's happened to most of us, it's happened to me personally. You get a notice or a letter from the IRS saying, dear Mr. So-and-so, our records show at the IRS that you received interest income from, XYZ Bank of $15, and it's not on your tax return. Please explain where it is on your tax return if you did report it, or if you did not, please send us $4.25 or whatever it is that was the tax that was due. And I guess if you sort of ratchet that example up and say, well, what if it's $1 million settlement that you got for a lawsuit because you were in a car accident and you're physically injured? It may be very clear in that kind of example that $1 million shouldn't be taxed, but if you get a 1099, the IRS doesn't know what it's for, the IRS thinks it's income, and you'll get a letter like that saying, please pay us $400,000 or whatever the figure is, or explain. So, I mean, I guess in my book, that's an audit. You start off, it's a correspondence, you start off with some kind of position that you have to take, and of course what you'd rather do is simply not have the query arise at all.
And there are many lawyers watching this particular broadcast and settlement checks and things like that. It's very important to consider all that. I want to talk about, too, the individual out there. Many people in this past year gave back a house, may even have filed bankruptcy, and they might end up getting some sort of 1099 from the bank that held the mortgage. And they may or may not be responsible for some income, but it's something that you can't overlook there either.
No, Scott, that's a great point. And there, oftentimes you will get a 1099-C, as in cat, which is a particular form showing basically discharge of debt type income. There are a lot of different 1099s, as I think I point out in the article, the miscellaneous, the 1099-MISC, that's the one that we probably see most frequently. But all of these things count, and as you said at the outset, Scott, don't ignore them. Keep them as soon as you open them, look at them, keep them in a safe place, because you will need them when you do your tax return, or you'll want to make sure that you hand over a complete copy of all of these things to your tax return preparer.
Well, Rob, as always, you have provided an incredible amount of useful information. We appreciate you taking the time today.
Thanks, Scott.
This has been The Tax Lawyer. You can find Rob Wood at Wood LLP in San Francisco. Many of the things that he writes is also at Forbes.com, and he's the author of over 30 books, many of them on taxable damages. This is the Legal Broadcast Network.